Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. In this video, we're going to go through the news headlines from the Wall Street Journal. There is currently a lot of attention on Jackson Hole and what the Federal Reserve will do with interest rates. Can the stock market continue its upward price path or momentum? Gold has been doing really well, but will that continue? We'll also look through the news headlines from Bloomberg, and gold is getting front page attention. We'll also look at crypto news, so we're going to get the retail pulse, and when we've done that, we'll get the actual market impacts and then the institutional pulse. Let's run the numbers. The S&P 500 sees its longest winning streak in 2024. US stocks have climbed for 8 straight sessions. And in news just in, US Secretary of State Anthony Blinken said Israeli Prime Minister Benjamin Netanyahu has accepted a ceasefire proposal to halt the war in Gaza, and the next step is for Hamas to say yes. There's an expectation that equities and the stock market will consolidate ahead of Jackson Hole this week, and that's happening on Friday or Saturday Australian time. We got back into the good news is good news and bad news is bad news area. For quite a while, we've spent our time in the good news is bad news and the bad news is good news area. The good news is US financial conditions are easing. One thing to just bear in mind, another weak jobs report would lead to growth concerns. Therefore, the true test for the market will be the August jobs report. A strong jobs report will mean that the weakness is behind us. Gold has been on a rampage and the precious metal hit an all-time high on Friday. In terms of market-moving events, please keep in mind Wednesday 2 p.m. US time, the Fed minutes will be released for the July meeting. Thursday, there's the jobless claims data at 8:30 a.m., followed by the S&P Flash Purchasing Managers Index at 9:45 and existing home sales at 10 a.m. But Friday is the big one. You need to keep your eye on what Fed Chair Powell is going to say at 10 a.m. And later on Friday at 3 p.m, the Bank of England Governor Andrew Bailey is going to speak as well. So there's some things that you need to keep your eye on. Expect volatility in the market at these times. In crypto news, Bitwise enters the European market with the acquisition of the ETC group. In total, the acquisition adds 9 European-listed crypto ETPs and raises Bitwise assets under management above $4.5 billion. Crypto is making such a huge impact on world markets that the US needs to change the definition of money. This just points to how much crypto is impacting the financial world. According to CryptoQuant, minor capitulation is now over. Typically, when this occurs, we see exponential increases in price. We'll have to keep our eye on structural levels because it doesn't always hold, but it generally does. So please bear this in mind as you're doing your trading and investing. But later on, I'm going to cover some fascinating points that I've not covered previously. If you're liking the content, please smash that like button, and if you're new, a very warm welcome. You might like to subscribe. We have a lot of fantastic information and just an amazing community, an amazing global family. Let's have a look at the actual market impacts. Inside the stock market, yesterday's session was a bonanza. Literally every single sector registered positive gains. Wow! AI chip heavyweight Nvidia did really well. Tesla was up 3%, Google 2.2% up as well. Starbucks unfortunately needs a little bit more coffee, that was down, and Visa and MasterCard were also down in credit services. Inside the crypto market, at the time of recording, Bitcoin was down 0.24%. BNB is doing quite well. This could show us that there is an underpinning inflow into the crypto market. Ethereum and Solana are just slightly down. XRP tends to lead recovery, so this is a good one to keep your eye on. And Litecoin has been doing quite well of late. Let's have a look through the greatest gainers and greatest losers in the past 24 hours. In terms of the greatest gainers, we saw artificial super intelligence, FET, up nearly 11%, followed by SUI, Wormhole, Aave, Tron, XRP, NEO, Leo, and BNB. Neo and Leo really like to hang around together. Turning to the greatest losers over the past 24 hours, Knot was not very happy. Celestia wasn't going for the stars at the current time. Akash and Crypto Brett is down. Oh, poor Brett. Ondo is down, Nexo, DYDX, 1000 Sats, and Zcash. And here is Crypto Brett. Thank you very much for your very kind comment, my friend. Now we've had a look through global news and market impacts. We need to look into the CTKS structure to understand how the institutions are viewing the market. And it's very, very different from how retail will be. In yesterday's video, there was quite a good comment about a 50 basis point decrease in the federal funds rate. Now, why is that bad for markets? A normalized, just a normal reduction in the federal funds rate of 25 basis points is a-okay. Why is that okay? Why is this one not okay? If we're doing a 50 basis point decrease in the federal funds rate, or a 75 basis or 100 basis point decrease in the federal funds rate, that means the government has messed it up. Oh, how could that happen? What I'm specifically looking for is this percentage to come up and up. If that's the case, if this one starts to go down, the 25 basis point decrease and the 50 basis point increase starts to come up, that means the Fed has broken the economic system. So therefore, I will be looking at lower levels of structure to trade. But if this continues, just around the 25 basis point decrease in the federal funds rate, well, that's okay. It's a-okay, as that's what's expected by the market. So basically, what you want to see is this particular line increasing, and this particular line, that 23, and this particular area decreasing. The market is always range-bound between structural resistance and structural support levels. If you know your structure, you don't need to be afraid of anything because you know how things work. And we've got a very light data session in the start of the week. It becomes heavier towards the end of the week. But one thing that we've noticed when we look at the CB leading index month on month, and that's the conference board indicator. This is a combined reading of 10 economic indicators related to employment, new orders, consumer confidence, housing, stock market prices, credit trends, and interest rate spreads. Previously, it was negative 0.2%. The forecast was negative 0.4%. We can see it's much lower than that, and that has thrown negative momentum onto the DXY. So just keep your eyes open, especially for these red releases. They're very important to just track. A lot of times in the crypto market, people just actually don't understand that the major market indices will move crypto. Actually, they pretty much move in lockstep. And when we look at the liquidations, total liquidations across the past 24 hours, there's been under $100 million of liquidations, with the vast majority being long. We always get long and short liquidations, but the relative percentage is very different. The longs are getting crushed. But at the moment, you can see it's tiny relative to just on average liquidation levels. This means that the movement in prices are not representative at the current time. Another way to look at it, when liquidations are light, it's not representative in terms of how price goes. When we look at 12-hour liquidation heat map, What you can see is these shaded areas here. That's where smart money will buy up and liquidate these short positions. And then they'll come down and sort of do the Pac-Man on liquidating long positions. These are high liquidity areas, so that means there's a lot of money floating around these particular areas. Not so much up here. Now, what does this mean? People have been buying the dip. This is the 12-hour Bitcoin liquidation heat map from CoinGlass. Price is always moving in a wave. Even in a downtrend, price comes up and down all the time. It does something like that. In an uptrend, it's not just up only, it's up and down, up and down, up and down. You get the idea. So we need to pay attention to not only the up case if we're buying long and going at spot with a particular target, profit in mind. We also need to understand that sometimes the market just consolidates. You need to be aware of that. Is it consolidating to the upside or is it consolidating to the downside? If that's the case, we need to keep in mind probabilistic ratios of where we think price is going to go from an up perspective, a neutral perspective, and a down perspective. Typically, people just don't do this. They say it can only go up or it can only go down. There's always a percentage variance. That's why we do our daily three-dimensional risk management. When we go to the 24-hour liquidation heat map, we can see a lot of the shorts have been liquidated out of the market. That means that people are coming in and buying the dip. They're getting more and more confident. So we could see a bit of a stretch up into around the 60 or even 61,000 to get more longs to enter the market. And then they can just drive down price and just gobble all of those liquidations up. This is what you need to be aware of. You can see even though we've come up here, we went down here. Price is always moving in a wave. It moves in a wave between not just liquidation levels, but CTKS structure. And of the two, structure is far more powerful. Many people just look at the Bitcoin price action and say, oh, I'm just going to ignore everything else. But all charts exhibit interdependence. We don't want to do any of these before actions because they just lead you to getting slaughtered financially. One universal truth, if you just focus on the structure, you're just way ahead of everybody else. If you're thinking in terms of up and down and sideways movement, you're ahead of everyone else. If you know chart intercorrelation and chart interdependence, wow, you are literally a superstar. Let's have a look at the liquidation heat map from CoinGlass on a 3-day basis. We can see that when there is an area of liquidity which is measured by this specific scale, when it gets very purpley, it's pretty much no liquidity there. When it gets very yellow, it means there's a ton of liquidity in these areas. Smart money is always gravitationally attracted to liquidity areas, but there's always things that can override this particular dance, so you need to be aware of that. The markets are always structurally bound, and they always reflect from structural levels. On the 3-day basis, we can see above that 60,000. That's looking pretty neat. And also, we would anticipate that more people need to come in here to buy the dip. Often the institutions will send a false flag out and basically up price to just get the longs to come in and just layer in to provide them liquidity, and then they whack them. And then the shorts come in and say, oh, it's going down. It's guaranteed to go down, because particularly retail only thinks in terms of one dimension. It's either going up or it's going down. There's no wave-based function that ever enters retail thinking. If you're thinking in wave-based functions now, you are an absolute legend. That's the way to go. It's a game changer. Price is always moving in waves. Often, what people will do, they'll just show you one particular cut of a liquidation heat map that serves their narrative. I don't do that. I'll show you all of them because you need to see all of them in order to make an educated decision. In order to be ready for downward price action, we don't think we're going to go any lower than 54,000 just at the current time, and probably not much more than about 64,000 either. This is on the 1 week liquidation heat map from CoinGlass, and you can see that gravitational bias up here is pretty important. We're going to look at the actual structural levels on Bitcoin and total crypto market cap and see how they're faring up above 60,000. Story-based analysis is a huge part of people when they just post on social media. They have a specific narrative and they don't let the facts get in the way of their narrative, in the way of their story. Don't be linked to stories, be linked to structure. It's a game changer in terms of how you think. And of course, when you start to layer that with a three-dimensional perspective of price just moving in waves, knowing how charts are intercorrelated and interconnected, and then doing your borsogging with your rules, sooner or later, your financial game will become consistently profitable. When we look at the 1 month liquidation heat map, what are we seeing here? We're seeing that there's basically, again, nothing much more than 54,000, and we could even go up to realistically up to the 70,000. This may take a little bit of time to get to, but it's really cool to look at. I'll just give you one more, because when we analyze things, we really analyze things. When you look at the 3 month liquidation heat map, we can see a lot of shorts putting their positions in above the 70,000 mark. There's not a lot of shorts just below or above the current price. Well, there are some, but the concept is they're all hanging up out here. You kind of remember when we had that big sell-off, there were a massive number of long positions that just got cut through. This is a really important thing to just bear in mind. Markets are always attracted to liquidity. That's why they're always moving in a wave as people become fearful and then they get optimistic. I hope this is giving you a bit of perspective on how you can look at chart interdependence. This is kind of an underpinning foundation that you might like to consider. Max pain levels can also be really good to look at, and one thing to consider, throughout the years we've tracked max pain substantially. And what were our findings? Well, max pain just simply gravitates towards where the price is, and the price is basically just moving between structural levels as well. So when you think about this, max pain follows structure. But when we look to the 23rd of August, we can see there's about $1 billion worth of liquidations there that could potentially occur. On the 30th of August, 3.43, max pain 61,000. So you're looking at about the 23rd of August, 59,000. If the price hits 59,000, that's going to cause maximum pain and potentially $1 billion worth of liquidations. Max pain at 61,000, 3.43 billion up for grabs. We've seen some very, very high notional values that don't hit their max pain levels, but it can give you some indication as to where things can go. 27th of next month, looking pretty interesting. But 27th of December, look at that, max pain $4 billion and $60,000. So when people say by December the price is going to X, that's not showing up inside the options market. Some really helpful things to look at. Open interest on Bitcoin is really good because open interest and Bitcoin's price tend to follow each other. If we get a reduction in open interest, we typically get a reduction in Bitcoin's price. So it's a very, very good thing to look at. And this is Exchange Bitcoin Futures Open Interest. We're going to look at CME just now. When we talk about open interest, I've just left a little definition here for you that could help out. One of the things to just realize is when the futures market is open, open interest is the way that we assess what's going on. It gives us a really good idea of market activity. When open interest is increasing, new contracts are created. This means that speculation and hedging is increasing, and opening of positions is what's going on. When open interest decreases, contracts are closing or expiring. This means that speculation is coming out of the market through the closing of positions and the decrease of market activity. So when you look at open interest, you can say, oh, this is investor attention. And now what are we seeing here in terms of investor attention at the current time? For the masterclass students, what I've just done should give you a wealth of information. Please let me know in the comments, what are your thoughts? We're going to look now into the Bitcoin structural levels, but of course the structural levels are available across these 32 charts from CTKSMethod.org. If you want to grab them, pick them up there. The reason that we look at Bitcoin structural levels, Bitcoin is underneath this, and all of these particular alts are overlaid across Bitcoin. When Bitcoin is coming down, the entire crypto market comes down with it. But when Bitcoin is going up, you can see exactly what is happening, and it happens in real time before your eyes. Understanding Bitcoin's gravity is vitally important. In yesterday's video, we were trading just here as the crypto market was coming down. And the concept was, where are we going to close out in the next 24 hours? Around B, at C, or below C, or around A, or above A? And understanding these particular areas, they're structurally bound. So let's just pop on the indicator. For example, we're getting a little bit of a rejection there. Does that have anything to do with structure? Let's find out. What you will find is that structure controls absolutely everything. There was structural overhead resistance at 60,659, and you saw it come up and just get rejected. This big candle was a positive fresh air gap up to a structural resistance level that then got rejected. You can see, as you know the structure, you know pretty much everything. Lower safety nets, lower structural safety nets came into play at area C, 57,904. And then when we started grinding through all of this overhead structural resistance around this 58,848 mark, we started to get positive price momentum to push us through up to around that A area. This is what I've always said. Price is always moving in a wave. It's going up and down between structural levels. Things are structurally bound. When we get over, we're going to the next structure above, but we have to confirm it. In other words, we have to get above it, consolidate enough to prove that we've got the upward momentum, not just keep on dipping down and weakening the structure. We want to see positive air gaps in here, which means the buyers are coming in. So far, Bitcoin is looking quite good, but we know from the liquidation heat map what is actually occurring now. I hope that I've given you a better understanding of how you can use the liquidation heat map in conjunction with your structural levels. You can see how vitally important it is. The reason that I do these A, B, Cs for you is that I want you to gain a deeper appreciation of how price can move in a wave between structural levels. So when you're trying to figure out where could we end in the next 24 hours, it's not going to be just like a straight shot there. It's going to be all wavy and all up and down. And in the next 24 hours, depending when your 24 hours starts, because we have a global family, you may have found that it hits your specific level. Some people would have said, oh, in the next 24 hours for me, at the close of the day, I think it will hit C. And it probably did hit C under those kind of conditions. So A, B, and C is not important. What's important is your thinking. So just in the comments, where do you think? Are we coming up to A, coming all through this structural resistance and coming up above that 62,350 mark to be A or above? Or do you think we'll consolidate around B? Or do you think we'll revisit C and consolidate around there, or perhaps even go lower? So C or lower, A or higher, or just around B? Please let me know in the comments. It's a really good thing for you to do each day. People refer to these gaps as fair value gaps or FVGs, but they don't know where they are. We know where they are ahead of time. We know where fair value gaps exist inside market structure, and this is the only methodology that allows you to get that X-ray vision. And well done everybody yesterday for your awesome quotes about X-ray vision. I would also suggest that you keep your eye on total crypto market cap. It's very important. Yesterday we were seeing total crypto market cap just selling down. But when we look structurally, we understand where it was going. It was going to a structural level. By turning on the indicator, you can see how this structural level, just above $2.009 trillion, held. And as soon as we got above these structural resistance levels, we move through a fair value gap. That's why we got such a big increase. Fair value gaps from the negative side and fair value gaps from the positive side can be seen even on the 1 minute basis with this indicator. And this way of marking up your charts, you can learn it yourself. And we know total crypto market cap and Bitcoin need to be read together. We can see right here, this was a Bitcoin structural level, but now here we have total crypto market cap structural support, just holding the potential market. So we may see something like this, just a bit of a shoot up. If we see a cut through that area, that means the buying activity is weak. All that's happened literally is that the institutions have gone after all of the shorts and just crunch them. But remember, institutions are always structurally bound. So if you have the X-ray vision, you know what's going on. As you've made it this far, you're a complete legend. You're spending the time to understand more and more how financial markets work, and they're really complex. To let me know that you've made it, please drop a comment, something like the futures and the levels, or how liquidations relate to CTKS levels. It's a really fascinating thing to look at. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.